Welcome everybody. My name is Karen Stone, and I am a realtor as well as a lot of other things here in the Park City area. I have been selling real estate since March of 2008. What that means is that I have impeccable timing for getting into the toughest markets, and I started my business in New York City. So, a lot of fun being there, very, very challenging market. But what that says to you is that I am an agent who has been through a lot, and I also am very connected to what's going on both coasts, more so in New York than in California, to help you make sense of what's going on and could potentially happen here in the Park City area. So I'm currently an agent with Coldwell Banker. However, I am not here to solicit you for any business. I am totally here to just provide you with some resources, with some insight, and hopefully that will empower you, whether you're looking to make decisions, whether you're buying or selling, or maybe you're just sitting on your property, or maybe you're just watching and you saw my post on Nextdoor. Regardless of why you're here, I want to welcome you all. I want to invite you all to post questions in the chat, and I want to keep this an open conversation if we can. Because of my access to New York, I still currently sell there as well in Manhattan. I do have access to a lot of economists and stat geeks who are constantly sharing information about what's going on a national level, which again, I feel is very important for those of you who are kind of in this like Park City bubble. You might not be aware of what's going on outside because very few people that I have seen in particular are actually talking about these things here in town. So I'm going to start with a more of a macro look at the market overall. We're going to look at rates, what might happen to rates. I'm going to do my best to get my crystal ball working again. It's been a little bit broken. So, nobody really knows what's going to happen, but we can look back and we do have some predictability going on. And then we're going to dive right into the Park City market. I'm not going to go too deep on any one in particular area unless you ask me to, and then I will show you what those stats are. So I'm going to share my screen. We're going to get right there onto my presentation, and we will dive right in. So that's me. If you want my contact information, you obviously all got it somehow. I'm just going to keep this open. Okay, so let's talk about rates. This is like the topic of conversation. Everybody is thinking that home prices are crashing because interest rates are so high and nobody's buying. But as you can see from this chart, we've got quite a few people and corporations that are predicting what exactly is going to happen. Here's what we know is rate prices overall are continuing to go up. However, in 2020, many of you may be remembering those 2020, 21, 22 days where prices just went sky high. They shot straight up. That is still happening, just at a slower pace. So the good news is that if you are sitting on a piece of real estate today and you've owned it for a bit of time, chances are that your equity, you are just building and building more and more equity in your home. So prices are still projected to increase. As you can see, Fannie Mae is projecting 4.1% increase. And we know that Redfin and Zillow tend to be the doom and gloom resources here, and they are feeling like prices will go down. So maybe let's just not listen to them. But overall, we are looking at long-term gain. And I am going to get into the Park City specific stats in the second half. Okay, how about those interest rates? What we all are saying is the minute they drop down to back down to 2 or 3%, everybody's going to be buying again. Well, I have some good news and I have some bad news. The bad news is that nobody's really predicting that that is going to happen anytime soon. In fact, at this point, we are predicting that they will stay. This is a site that I like called Keeping Current Matters. If you're not following them, I encourage you to follow them. It's a free website. And they are predicting, as you can see, Fannie Mae, MBA, Wells Fargo, all of them are still predicting that we will be in that 6% range. Ideally, we somehow, which will probably happen by the end of next year, will get closer to that 6%. Which will make more people move. But as a buyer or as a seller, if you are waiting for that number to change. If you're thinking I'm going to sell my property and I'm going to get all these bids and that's because the interest rates are going to be low, all the buyers are going to jump off of the fence. I hate to break it to you, but that does not look like it's going to happen anytime soon. And if you're a buyer and you're waiting for those rates to adjust a bit down, likely also not going to happen anytime soon. I do check fairly regularly the CME group, which does track and we can track the predictability of the Feds dropping the rates. Now, remember, mortgage rates and the Fed rates are very different. One does not necessarily mean that the other one will be impacted. As you know from the news, everybody's waiting for Jerome Powell to drop the rate. But as of now, what I am seeing, and I have a chart to back it up, there's about a 95% chance that the meeting next week, they're not going to drop the rate. And according to the stat today, there's about a 60% chance that they will drop the rate at the following meeting, which is in September. So if you're like thinking buy, sell in over the next few months, again, unless something drastic happens that will impact this, inflation numbers go up, the job numbers are all looking really good. So there's really no reason for them to drop it, other than how many of us feel that it'll unlock a lot of these buyers who are sitting on the fence and potentially even more inventory. Okay, who is buying? I think this is so important, especially in this town, because we do have such a broad demographic of who's purchasing, and about 50% of the real estate that is sold here in Park City in general is cash buyers. But we have to think, who are these people? Like, if I have a home,
No, Pepper.
like a luxury home, sorry,
Oh,
if you can mute yourself, whoever that might be, that would be helpful. Who has the cash? I think that's super important. We know, I don't have the stat here, but if I'm happy to send you all some previous charts. We know that the buyers right now, the biggest buyer pool are the older millennials, so about 40 years old, plus, probably to about 46 or so, and the boomers. That's who has the money right now. And why is it the millennials? Because there is a huge transition and a trade of generational wealth that is transferring to that generation. So that is why many of them will be buying and entering the pool of real estate and becoming buyers. So if you're thinking about selling and you kind of have this target in mind, I encourage you, if you are working with an agent, to talk to your agent about, who do we really think this might be that's going to be walking through the door, and how do we market to them? Oops, sorry about that. The other thing that I wanted to point out is the jobs. Again, this all has to do with why they're not really dropping the rates, is because the job market, now I'm talking very generally, obviously there are certain sectors that are doing better than others, but overall in Utah alone, as you can see there, 13.6% job growth from March 2020 till March 2025. The good news is that we have more inventory in our state now than we did in March of 2020. So we still know that people are coming to our states, jobs are being created. And so I think that if you are considering buying, keep in mind that that there could be some competition depending on where and what you're buying. And if you're thinking of selling, the good news is that there are still people coming in, unlike some of these states where they're not seeing a lot of job growth. Okay, now I'm going to jump right in to the Park City market. So what's going on in Park City? Now these charts are from a man named Rick Klein. You might recognize his name. He participated in the Park City Follies. He also was in the banking business with Wells Fargo. So I love to read his stats, and I'm happy to send these to you as well. We just had our quarterly meeting last week, and he is just a wealth of information. So I'm really only giving you kind of the top line stats that he shares. But everybody wants to know what is happening with pricing in Park City. Now, this stat in particular is for the greater Park City area that does include Park City and Snyderville Basin. And as you can see here, prices continue to go up. Um, Local appreciation, as you can see in that second bullet, is about 3.2%, excluding new builds. And that is probably one of the key takeaways that if you take nothing else away from tonight, I want you to remember that Park City is so specific. And when we're looking at these stats, we really have to look at, are we talking an overall market, resale, or new construction? And I do have a chart for that as well. But in this chart in particular, what you can see here is that if you do own, your property should continue to go up in value. All right. We all know that we just got our home valuations. The county might say that it's worth more than you think it's worth. It's super, super, super neighborhood and product specific. But overall, we are seeing it going in the right direction. So if you're considering buying and you're waiting for prices to all of a sudden drop, as you can see, that has not happened since we were in the recession. Moving forward, let's talk about inventory. The best news that I can share with you is that inventory is back to like a normal level. This is the highest level it's been since August of 2020. Many of you might be thinking, that's not such great news, Karen. I don't want more competition. But the good news is that those who are considering selling, many have nowhere to go. That's what's been stalling. That's what's been stalling the market lately and keeping prices high is that there's such limited inventory. So people who might think of selling have nowhere to go, and people who are thinking of buying have nothing to buy. So now we've surpassed 1,000 units, which is phenomenal news. And this, as you can see on this chart, if you look over on the very right, and all those green lines going up and down, what I want you to see from that and those levels in particular is that it's extremely seasonal. We are on an extremely, so far, predictable wave of inventory hitting seasonally. Now, this obviously differs based on what we're looking at, single family homes, condos, or land. That's all included here, with green being the land. But we can at least see that the inventory levels, even if we look at the lower ones, are all kind of going in the right direction and are all seasonal. So in our quarterly one stats meeting, the joke was there wasn't really any news. Everything was pretty predictable and seasonally predictable. Now we are continuing to see that the same. Our numbers should be, in terms of inventory, they should be, as you can tell from pre-COVID numbers, should be closer to that 1,200 range. So we still are well below where we used to be. And again, we have to factor in how much of that is new development. And if you've been driving around town like I have, you know that there is a lot of construction going on, and this little area called the Jordanelle that is just exploding on every single angle. And so that is also adding to a lot of the inventory that we have here. Let's keep moving. But the good news is that demand is still holding. So people still want to be here. So if you see this stat, we are about 5% below where we were last year in terms of demand, but 14% up from 23. And again, I love to look at that green dotted line. This is exactly where we should be. So you could see just how like out of sorts we were during COVID. Some things to point out here, and maybe this will help some of you make sense of the market, is if we go to Q2 2021, you see that yellow. That was a pretty big percentage, and that was a lot of people coming here, buying land, let's just say in Promontory area, realizing how expensive it was going to be to build, and choosing to sell it. So there's just fewer closed sales now on land, primarily because of the unknowns of how much it's going to cost to build, and how long it's going to take. So we see there's, again, very consistent numbers when it comes to condos. We're still at a pretty normal pace, as well as the single family homes. So pending sales, something to note about Q2. We tend to see the most sales happening during the spring and the summer. So we were a little bit concerned about our quarterly numbers because we saw them it was very top heavy, meaning most of the sales of Q2 were happening right as ski season was ending. Why is that? perhaps we didn't have as much snow. People were out there looking at real estate instead of skiing. I know I was in that bucket. Ski season didn't go quite as long. And I think obviously we had a little bit more instability. That is like the name of the game right now. We have instability. So April 2nd was Liberation Day. So that obviously impacted a lot of places, including New York City. A lot of places really stalled right around then. So I think we've just started to see people getting a little bit more used to it. But we have not seen the demand in Q2 like we normally expect. We're not so far under, but we are, as you can see, pending sales are up 10%. Again, we have to look at this as a full picture because that stat does not tell the whole story. So buyers are still out there, but as you saw, they have options and they can remain picky. Now let's talk about resale versus new construction. This is probably the most important stat that I can share with you, and that I hope that if you are looking at anything from the media, that you will take away that we have to look at exactly what the impact of new construction is on our market. So the resale market for Q2, we saw 250 sales. 250 sales compared to Q2 new construction 54. 54. So that's a pretty big number when it comes to the full pie of sales. Even though it shows, and what this says is that overall we were down, sometimes that is literally about the timing of when these new developments hit. For instance, Pioche Village right now is trending because, and they're not trending at a huge price point, but most of those properties are selling for like, $500,000 to $700,000. So that's a lot of inventory that tends to skew the numbers. At the same time, we have everything at the Marcella, right? There's not a lot there, but there are a lot of new units hitting the market in pre-sale, obviously, and those are in the multi-million dollar range. So those numbers directly impact our overall stats. So as you're looking at the stats, and I'm going to send you a lot, I urge you to consider exactly where that new construction is, including Silver Creek Village, around the Jordanelle, on all sides of the Jordanelle. The Deer Valley, obviously Deer Valley East Village, that's a huge one. And canyons, there's just new developments popping up all over town. So we do have to look at exactly what percentage of the full pie is new construction. And I'm going to share some interesting points about new construction as we go. Neighborhood trends. Now, I think this is really fun. These are fun stats. And again, I'm talking very general here, and I'm happy to dive in more on your specific market as we go. So normally Toohey and Promontory are like neck and neck with, who's going to have the most sales. And we saw that Toohey came out ahead, up 40% in the median price, up to 5.8 million. Again, we have to factor in exactly how many sales we're talking here. That could mean an additional 2 to 3 more sales, quarter over quarter, or, over Promontory. Let's see. And then the next one is Park Meadows. Lots of stuff is trading there more than usual, which is great because I personally tend to have a lot of buyers who want to be there. That market in particular, we should see that market start to slow down in around the August or so, because most people want to get in or out of there before the school starts. Pioche Village over by the Jordanelle is dragging down the sales numbers. Again, we have to look at all of this, right? Like those are 550,000. Mayflower Lakeside, you can get a condo there, 3-bed flat for around 1.2 to 1.5. And then you've got the Marcella and the Four Seasons selling for, $5+ million. So as an area, those numbers can be incredibly skewed. To give you just a general statement about what's going on. And then we did have a lot of sales in the Colony. As you know, those are all generally on 5-acre lots. Some are newer, some are older, but we had 5 sales over $15 million. Keep in mind too that the Colony and Promontory are in Snyderville Basin. So you do see stats trending higher in this area because of those areas. Okay. I know that I'm going a little fast, so if you have any questions, please feel free to slow me down and I will do my best to answer them and follow all the things going on. Let's talk year over year growth. These are just a lot of stats to go through, but we saw overall units sold went up 8%. Volume, which means the value of all the homes that were sold, went up 17%. Keep this in mind that these are some of them, it just takes a few big sales to skew these numbers. Single family homes, we were up 13% in units and up 18% in volumes. Condo, up 12% in units, up 28% in volume, and land, we were down in units and down in volume. Overall snapshot of the Park City market. Condos, they also went up both in average price and in median price, keeping in mind that some of those new developments directly impact that. The Jordanelle had huge volume growth, which again impacts the median price in particular, which went up 13%. In Heber Valley, the unit sales went up 158%. And if you have been driving around there, you know that there is a lot of new construction around there. So that is just something to consider in terms of, where if you're tired of being in where all the other people are, right, in Park City or in Heber, and you feel like, or in around the Jordanelle, and you don't really feel like you need to be close, you can go out into Heber, and there's a lot of new construction. Now, single family homes are priced. The good news is it's stable. The average price, $4.9 million, which I love to share the stat that we are still very much below the Aspen number, which I don't have right on me right now. But Aspen is, I think I read it was about 13 million. Camas Valley median price is also up. Jordanelle median hits 4.075 million, up 10%. We know why. We had a lot of new construction going on there. We have a lot going on in Hideout, leading to these prices that were under construction, selling them off now, even reselling. So the primary market total median home price is 1.79 million. And again, that's up 7%. Okay, so here are some insights that we shared as a community at our recent call. What we are finding is that many high-end buyers, often with paying cash, are focused on new construction. They don't necessarily care where it is. They just want something new. So if you have a luxury home right now that is, say, in that, $5+ million range, and it needs a lot of work, there are plenty of buyers out there who are looking in this range. However, they are very specific with what they want, and they are willing to give up on, as you can tell in that value focus, they're willing to give up on that location for now, at least, in order to get something new. So if you are in a prime location and you're thinking, I want to do a renovation to sell, in 3 to 5 years, definitely dive in and do it, because most of these buyers do not want it. So if you are considering, listing your home for sale, think about not just what's in your area, but what else is out there. So again, if your home is in Park Meadows, what can they get in the Hideout area? Maybe they don't have to be in the school district. Maybe they're fine, driving to the new entrance of the Deer Valley East Village. They might not necessarily care about Park Meadows and might not have that weight that you personally put on it when you purchased it, or perhaps that has been the norm over the last several years, where many people were coming in to get their kids into the school district. So inventory again is climbing. Condition matters more than ever. So if you're sitting on a property that has not been updated, all that means is you just have to be strategic with how you position it and how you price it. The insurance is a huge factor in this market. I know that when I'm representing buyers, as soon as we go under contract, we get on the phones with the insurance providers to make sure that they could get coverage while they're still in that due diligence period, because God forbid they can't, they might not be able to purchase the property. Buyers right now are more focused again on that shiny penny within that target price point. They're not as focused on being close to everything or in the middle of the action as some of the older Park City homes are. And I do want to remind you all that the Park City, there is still appeal here in Park City. This stat, I really like this one. Since the 2008 housing peak, home prices in the Wasatch Back are up 6.5%. From the post-crisis bottom, they've climbed over 10%. So clearly we are seeing that that homes here have, the long-term investment is still very strong and stable. I think this is my last slide, and then we'll jump into neighborhood specific stats. But strategy matters more than timing. So you can try to time it based on the seasonality, but as we just saw, we have not had quite as many sales in at least in the second part of Q2 as we normally would. So strategy really matters. Buyers, explore your options. I get emails every single day of new listings, of new price drops. So keep your eyes out there. Sellers, you've got to be ready to price and to prep your home and to compete with that price in mind. And as you will see in the following slides, or as we go through neighborhood by neighborhood based on your requests, we really have to focus on what are you selling? What is the condition? Where is it? Meaning, are we selling a $500,000 condo that needs a lot of work, which is going to attract a buyer who might need to get a loan, and so they're super sensitive? Or do we have a new luxury home? I keep calling out Hideout because I was just recently there, but what else can we get for that $5 million range? I could get a home up in Promontory, might be, I could get one in Park Meadows, really looking at neighborhood specific numbers and pricing your home accordingly.